This insane Heikin Ashi strategy allowed us to win 9 out of 10 trades last week. Not knowing these 3 simple rules could be the reason why you complicate your trading process every single time. You can apply this incredibly simple and powerful strategy for different asset classes, whenever you trade Forex, crypto, options, or stocks. During this video, we also will show you how you can get access to our top-notch private indicator, known as quantAlgo. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Before we continue, make sure to hit the subscribe button and hit the notifications bell, so that you can keep up to date with new content releases. The biggest trader's mistake is relying on just 1 or 2 trading strategies. The market always evolves over time, so that we should also expand our knowledge to stay afloat. As you can see, we have a classic chart with Japanese candles to the right and the same chart with Heikin Ashi candles to the left. So, Heikin Ashi candlesticks make the chart more readable and trends simpler to analyze. As a result, Heikin Ashi candles help us filter out the noise of day-to-day price fluctuations. As can be seen on the right chart, we have some red bearish candles during an uptrend, which is normal because the price always moves cyclically. Alternatively, the Heikin Ashi candles remove all that short-term noise and show us a pure trend. That's because Heikin Ashi candles calculate by using a different formula. Let's consider it in depth. So, if you are enjoying the video, leave a like on it. Also, let us know your questions and thoughts below or topics you want us to cover, as we always take your comments into consideration and love hearing from you all. Here, we can see a Japanese candlestick, which calculates using the current period data, and shows the opening, closing, high, and low price points. By comparison, a Heikin Ashi candlestick takes 2 period average data. To calculate the next open, we should take the open of the previous bar, add to the close of the previous candle and divide it by 2. As a result, the opening of each Heikin Ashi candle stands exactly in the middle of the previous one. To calculate the next close, we should add the following values: open, close, high, and low of the current candle, and divide it by 4. It shows us the average price of the current bar. A Heikin Ashi candle high is a maximum value from the high, open, or close of the current period, while a low is the minimum value from the low, open, or close of the current period. In an uptrend, the Heikin Ashi candle with a big body, no wick along the bottom, and relatively small upper wick shows us a strong bullish momentum. In a downtrend, the Heikin Ashi candle with a big body, no wick along the top, and relatively small wick along the bottom, shows us a strong bearish momentum. Because the Heikin Ashi technique smooths price information over 2 periods, it makes trends, price patterns, and reversal points easier to spot. With that being said, let's move on to the strategy section. These are the exact steps that we use to take superb price action-backed trades. Step 1. We should add 50 EMA to the chart, which acts as a dynamic support. Here, we use a 2-hour chart, and the price should be above the 50 EMA to give us a bullish bias. Consequently, the price should be below the 50 EMA to give us a bearish bias. Also, you may adjust the basic time frame according to your trading style. For instance, if you are a swing trader, you can use a 4-hour time frame to establish the bias. If you are a day trader, you can switch to the 1-hour time frame for more aggressive entries, so that you can find the best combination, which perfectly suits you. However, remember that the following steps remain unchanged. Step 2. We should wait for a long wick rejection of the 50 EMA. It shows us a pullback to the dynamic support or resistance. We prefer the pullback trading style as it allows us to enter the trades with tighter stop loss and wider take profit, meaning that this approach improves the risk profile significantly. Pro tip: the wick of the rejection candle should be greater than its body. This shows us a clear pullback to the dynamic support with a high chance of a trend continuation move. In the opposite case, if the body of the rejection candle is greater than its wick, we should skip this setup due to the high chance of a trend change. Step 3. Now, we need to confirm that our pullback is over. For this reason, move to the 15-minute time frame, where we should look for the 50 EMA break to confirm our immediate trend. Pro tip: in some cases, the price can be already above or below the 50 EMA on the 15-minute time frame. In such a case, we should jump into the trade immediately because our trend is already confirmed. Now, knowing this strategy is only one part of the process. A lot of trade opportunities arise every day on the market. If you want to enhance your trading experience, you need a high-quality algorithm that combines complex trading processes to tell you when to buy and when to sell. If you want to access our own private indicator quant algo to get results fast, all links will be in the description and the comments section below. Without this algo will put you at a disadvantage. As for now, let's see the market examples. Here's Microsoft stock 2 hours time frame. As you can see, the price is below 50 EMA on the given time frame, meaning that our first step is complete. Now, we should wait for a long wick rejection candle, and here's it is. We have a perfect long wick candle right here that satisfies our rejection criteria because the body of this candle is less than its wick. But still, no entry as the price may easily form another swing low or even reverse to the upside as our rejection candle is greened. At this point, let's move down to the 15-minute time frame to confirm our immediate trend. Here's a 15-minute time frame and we can see a clear momentum-backed 50 EMA breakout right here. So, our immediate trend is confirmed as bearish, and we can enter the trade short on the follow-up candle. We should place our stop loss above the previous swing high and, for example, target a 2-for-1 risk to reward. As you can see, our take profit was easily smashed. Here's Tesla stock 2-hour time frame. So, the price is above the 50 EMA right here, which means that our first step is complete. We can also see a perfect long wick rejection candle right here with a very long wick and small body. So, let's switch to the 15-minute time frame. Here's our 1-hour candle and now we should wait for the 50 EMA breakout, and here it is. We enter right on the next candle, placing our stop loss below the recent swing low, and the price then proceeded up drastically. Here's Bitcoin 2-hour time frame, and we have multiple trading opportunities right in this area. With that, let's focus our attention on this long wick rejection candle. So, the price is below the 50 EMA, and we have a great long wick rejection candle. For now, let's move down to a 15-minute time frame. Here's a 15-minute time frame, and right here we have a perfect 50 EMA breakout. So, we enter the trade on the follow-up candle, setting our stop loss above the previous swing high and targeting 2-for-1. As a result, our take profit was easily reached. Here's pound dollar and, as we can see, the price is below the 50 EMA and we have two perfect long wick rejection candles. At this point, let's go down to the 15-minute time frame to catch a confirmation of our immediate trend. So, here's the 15-minute time frame, and, as you can see, the price breaks below the 50 EMA right here, enabling us to enter the trade short with a stop loss above the previous swing high, and target 2-for-1 risk to reward. As you can see, then the price easily went in our direction, showing an immense drop. As for now, let's see the last example that emphasizes the importance of the last step, meaning 15-minute confirmation. Here's the gold 2-hour time frame. We can see that the price recently broke the 50 EMA on the given time frame and proceeded up, allowing us to move to the second step. Then, we received a great long wick rejection candle with a very long wick and small body. Once again, our second step is complete. Let's go down to the 15-minute time frame. Here's a 15-minute time frame, and, as you see, the 50 EMA was never broken right here, meaning that our immediate trend remained bearish, and the price then dropped significantly. From the price action standpoint, this tells us that the pullback translated to a trend change. So, once again, always wait for the 15-minute confirmation before entering the trade. The initial long wick candle shows us only a reaction, which is not enough for a high-quality trade. So, if you are enjoying the video and found it helpful, please leave a like on this video and comment, as this goes a long way and helps support our channel. We appreciate it. Thanks for your time and I'll see you in the next video.